Well,
Hello, everyone. Welcome to this CEER webinar, the first of 2026. I'm very excited to have everyone here. I see the virtual room is filling up as I speak. We already have 70 attendees. I'll hold the floor for a few more minutes just to leave the time for people to enter. So just to introduce this webinar today, introduce myself. I'm Rafael Anotto. I'm the Deputy Secretary General for CEER. And I'm very excited about this webinar today about our regulatory framework report, but we also call this Making Europe's Energy Networks Work, because this is, I think, the real topic, or at least the broader topic that brings everyone here today. We have 1 hour and quite a packed agenda, so I'll try to go to the point. The first thing I want to say is this: this webinar is part of a series that we started last year with a biomethane webinar, and we are continuing. This is the first webinar of 2026, but we will have a few, or I would say many more, to come in 2026. So this is also a call also to stay until the end, where we'll unveil which webinars are coming after this one. Today, the panel that we have and the guest that we have, I would just start with Pedro Verdelho, who is our CEER Vice President, but also Chair of the Gas Working Group, who's going to give opening remarks, and then we'll go with a presentation of our report, and then our stakeholders. I'll introduce them when we get there. So without further ado, I would like to give the floor to Pedro for the opening remarks about this webinar. Pedro, the floor is yours.
yeah, thank you very much, Rafael. Well, good afternoon all. Welcome to this CEER webinar, Making Europe's Energy Networks Work, as mentioned by Rafael. And today's session will focus on recently published report on regulatory frameworks for European energy networks 2025. This annual CEER project was developed by CEER's Incentives, Regulation and Benchmarking Workstream, and it provides an overview of the regulatory systems for electricity and gas networks, both at the transmission and distribution levels in CEER and also energy community countries. Let me start by congratulating and thanking the IRB workstream co-chairs and the members who developed and contributed to this important report. It is a huge task to gather and process all this information, and they have done this in a fantastic way once again. This is a very important report in the context of the present and future challenges facing the European energy systems. The decarbonization and the competitiveness of the European economy will require significant investments in our energy networks. The efficiency of those investments and of our infrastructure use is of critical importance. We have to use energy networks more efficiently and develop them in a way that creates an infrastructural basis for efficient energy markets at least cost to consumers and society. Indeed, decarbonization will require new investments at all levels of the grid to connect new centralized generation and to minimize as much as possible network congestions arising from the seating of new renewable generation. In this context, regulation will play a role in two different ways. First, the traditional role of scrutinizing investments, ensuring they are economically efficient and that these costs are recovered through network charges. Secondly, regulation can have a more dynamic role, providing signals and incentives to guide investment and operation decisions towards the benefit of the networks and end consumers. Decarbonization goes hand in hand with the challenge of promoting the competitiveness of European economies, where energy prices will be a key element as the reports of Letta and Draghi have noted. In an energy system dominated by a growing integration of renewable generation and an increasingly centralized physical component of the energy system, we have seen the rise of price volatility, an increase in occurrence of negative prices and curtailments, and an increase in the percentage of balancing costs in the final energy prices. To confront these challenges, we need smart and dynamic regulation to unlock flexibility and to remove barriers to the entry of new technologies and business models that will help in smoothing the way to more efficient use of the grids and more efficient markets. In this context, this report, by offering an overview of the regulatory frameworks of 35 European countries, gives an incredible perspective and insights on how to build a smart and dynamic regulatory framework to exchange good practices and examples and to promote cooperation and coordination among national regulatory authorities towards our shared goals and benefits. To present this report, I will shortly give the floor to Francisca, one of the co-chairs of the IRB work stream, again with many thanks for all the work done on this report. Following the presentation of the report, we will have a panel discussion moderated by Rafael Anotu, CEER's Deputy Secretary General, with Nicolo Rosetto from the Research Fellow at Foreign School of Regulation, René, co-convener of the Finance Advisory Group at ENTSO-E, and George Usner, Director of the Market Area at ENTSOG, followed by a Q&A session. So we can expect a very interesting and broad exchange with different perspectives from academia, the electricity sector, and also the gas sector. I wish you all a great webinar and thank you. It was for me, I'm very pleased to have opened this work and this webinar. Thank you very much.
Thank you, Pedro, for these opening remarks. This is very relevant and exactly on time, so I really appreciate. Without further ado, I will give the floor to Francisca to present the report, and we'll share the slide in a second. But Francisca, you can start already.
Yeah, thank you very much. Welcome. Also from my side, I will give you a short overview of the results of the Regulatory Frameworks report from 2025. So we could start with the first slide. The report has been published 2 weeks ago on the 22nd of January. You can find it on the website. We have a QR code to scan. And the report comprises 228 pages this year and 13 documents. And I will guide you through some of the documents so to see how to work with the report in the future. First of all, some general points. The objective of this report is to provide a general overview of the regulatory regimes applied last year in 2025 and the required efficiency developments. It has a major focus on the calculation of some financial figures like the rate of return, the regulatory asset-based depreciation of assets, and the incentive mechanisms. All these 4 topics form one chapter each of the report. This year, we had 35 European countries participating in the report. Among them were 30 CEER members and 5 ECRB members, where 4 of them are also CEER observers. The report is a toolbox of regulatory components in use, and it is very important to highlight that most regulatory regimes are very complex and individually adjusted. The report cannot give a complete description of all European systems, and comparisons of specific parameters are very difficult and should only be done in the context of the whole regulatory system. So this is to be kept in mind. We will not give recommendations for the best system, but we will give a landscape of tools that are in use and that are combined in some or some other ways. The regulatory frameworks itself is a living document. So we have the main part, the RFR, and 2 annexes that were added to the report during the following years. It is edited by the German NRA, Bundesnetzagentur, but the chapter 2 contents are all written by the countries themselves. Next slide, please. We have the following structure. So one chapter 2, where each country writes its own text with a limitation to 5 pages, beginning with a fact sheet with the most important information and then an individually designed text. And the chapters 3 to 7 are written and handed in Excel tables. And we as Bundesnetzagentur added those to the text blocks for the main text. All the Excel tables can be found in Annex 4. This is very important, as I will recommend you now and in a few minutes to look at the tables for more detailed information. And then we have the Annex 5 and Annex 6 files. I will go into that in more detail later. Next slide, please. So chapter 2 has this fact sheet. We have 1 column per network sector, gas and electricity, and 4 level, TSO and DSO. Here are topics like the market structure, the general framework, and the biggest figures of rate of return, regulatory asset base, and depreciations in a very short overview. The idea here is to keep it compact on 1 page. Most countries were able to stay more or less within this limitation. Then we have an additional text with detailed descriptions. There is no structure prescribed here, but oftentimes there occur paragraphs about the historical development of the regulatory regime, transparency, or an outlook on what is going to happen in the next years and regulatory periods. Also, single figures are used to form a complete regulatory picture, but no tables or graphs are shown in this subchapter. This year, we had no data by Cyprus, Great Britain, the Netherlands, and Slovakia. This is marked in the text, and in the tables, we took the figures from the last year. Information on the Wallonian region, and this year, Bulgaria firstly participated in the report with information on their gas sector, with a promise to add information in the next report for electricity. What is new here this year is a paragraph in chapter 2 with the title Mode of Action of Incentives. Here we have the idea to give shortly some keywords how the incentives work, like the X-gen factor or the WOC, or how the efficiency benchmarking methods work, to give them as an appetizer, and if some interested people find those, they can go to the NRAs and ask for more details, but to see which methods are in use and where could I start my investigation. Next one, please. The chapter 3, you can go on for, yes. In chapter 3, we have the economic theory and the regulatory system. We find that most countries use incentive-based approaches for their regulatory system. This might be a response to the drawback of the formerly used cost-plus regulation. The incentives have to be reduced during the current regulatory period in most of the systems, and also mostly the reduction has to be done on the OPEX, operational costs. The share of the non-controllable costs on the allowed revenue varies largely between the countries and the sectors. Here's the range, but with the idea to see in the chapter 3 tables where the specific outliers come from. Most importantly, most important cost positions here in the non-controllable costs are the network losses, the network fees, the ancillary services, or redispatching costs. And only a few countries distinguish between permanently non-controllable costs and temporarily non-controllable costs. Some other questions that follow are on the transmission system operators. We see that nearly all countries only have one TSO for gas and one for electricity. In most of the countries, the functions of transport and system operation are within one company. And mostly a common methodology is used for both of these functions in the TSO sector. The next chapter is the calculation of the rate of return. Here are different ways named, but most oftenly we see a weighted average cost of capital factor, the WACC. We have the simplified formula here, and there is a choice between the nominal and real WACC and before and after taxation WACC and the vanilla WACC. Most NRAs implement the nominal WACC before taxation. Below we have the formulas with all the parameters that are used, and on the next slide we see the ranges where the parameters have their minimum and maximum. I would recommend to see in the Annex 4 tables of Chapter 4 where the specific values range in the specific countries. I will not go into detail here. The next slide shows information on the regulatory asset base. This is a very important parameter to calculate the allowed revenue. It can be based on new and historic investments, and therefore it's usually linked to the depreciation methodologies we will see in Chapter 6 in a minute. Nearly all countries use 100% of the regulatory asset base for their tariff calculation. And the structure of the individual components that are included in the RAP and the evaluation differ a lot in the countries. We see here some possible parts that can be or cannot be included in the regulatory base. So the fixed assets, for example, the leases, the assets under construction, the working capital, or the capital contributions of third parties. Then we have a question on the valuation of the RAP. So whether it is evaluated on historical costs or on re-evaluated costs, or on a mix of both. Many countries adjust the regulatory asset base during the current regulatory period when new investments or depreciations come, so that network operators do not have to wait for the next regulatory period. So depreciation is most often linked to the regulatory asset base and uses in most cases straight line depreciation. The alternative is an accelerated depreciation. This is not often seen now, but perhaps this is a trend for the future in the sector. For example, in Germany, we see that they implemented a choice between a straight line and an accelerated depreciation in the gas sector. The depreciation rate depends on the type of the asset and mostly lies between 2 and 5%. Most countries report that they have individual each type of asset. So, for example, lines are depreciated over 40 years lifetime. And only a few countries use the average rate for all companies and all assets. Here we see this year an interesting development in the gas sector, that the depreciation rate can be chosen such that the life ends in 2045 or 2050. As mentioned, the depreciation can also be based on historic values or re-evaluated values or a mix of both. And we see most often the same method here as used for the RUP. And our last chapter in the report is the description of incentives established in the system. So the installation of incentive elements in regulatory systems are assumed as one main element. Here are some examples that are named most oftenly. So enhancement of the cost efficiency, quality of supply, security of supply and cybersecurity, integration of renewable energy, smart technologies, and so on. And some also quite interesting further incentives that single NRAs named here. I will not go into detail on this point. Again, the recommendation to have a look in the Excel tables for chapter 7. There are also many interesting explanations why countries use the one or the other incentive. And one last point that is new in the report. This is the subchapter 7.5. So we have the paragraph in chapter 2 that is new, and this one is 7.5. Here are also some details on the method that are used to implement the incentives. So, for example, Austria names that the efficiency score is a combined score, 50% ADEA, super efficiency and outlier analysis, and 50% moles with Cook's distances. So again, many keywords to see which concrete implementation is done on the very deepest level to find the correct NRA to find more information. And the last points, last but not least, we have the Annex 5 and 6, the case studies. So Annex 5 is the national case study. We have 12 participants here this year. Greece reviewed their case study completely this year. And here we have a detailed description of the regulated system. There is no page limitation and much space for calculations, tables, and figures. So when the space in chapter 2 is not enough, then this is the correct place to give a complete or large description of the regulatory system. And Annex 6 is the general case study. Here we have 5 participating countries. The goal here is to show the differences between the single regulatory regimes. So we have one fictional electricity DSO given with its assets and costs, and then some questions about the depreciation, regulatory asset base, WOC calculations. It is very important also to highlight here that it is no judging comparison, but a quite extensive calculation of all these measures just to see which system here in this short version would give which results. And with this, on the last slide, I would like to thank you. And here's the QR code again for the download.
Thank you very much, Franziska, for this overview. The connection was patchy at times, but I think we got most of it also with the slides. So it's great, and thank you. Really, it's really helpful to have that technical breakdown. To my knowledge, there are no other reports or no other works that really give that level of information. So I'm really glad we're able to go over this and to have you covering it. I would like now to call on our panelists, starting with Nicolo Rossetto from FSR. Could you, Nicolo, give us a bit your thoughts on this report, but also maybe on the wider policy framework and what that kind of triggers in terms of thinking when you're listening to what was just said? Nicolo, go ahead.
Thank you, Rafael, and thank you to CEER for the invitation to join this very interesting webinar. Well, first of all, congratulations for the work done, because as also you and Pedro said, the report is extremely valuable since it gathers a huge amount of first-hand information on regulatory practice in the various European countries. And it tries, of course, as much as possible to provide this first-hand information in a kind of harmonized and comparable setup that researchers like me, but also practitioners like many of you can use to address some of the several knowledge gaps that we have today. And by looking at this edition of the report, but also in the past, one thing that is very important to highlight is that economic regulation of networks, of energy networks, is not what I can call an exact science. I would say it's more like a piece of craftsmanship. It's something that you tailor to solve issues that maybe are general in nature, but you need to solve them in a specific context, in a specific place, and at a specific time. And this, of course, leads to the fact that every regulatory framework in Europe, but also elsewhere, is full of details that make one framework different from the other. So this, of course, complicate any generalization, and we need to be aware of that. We need to be aware that regulators are called to strike a delicate balance between multiple different interests, different goals. And in this sense, I think that the report plays a very important role. I would say today, even more than some years ago, because today, regulators, network operators, researchers, for their part, live in a context of very high levels of uncertainty. I would say in a very dynamic landscape. We have many question marks with regard to the future consumption patterns, to the future generation patterns, even to the technology. We see a lot of new technologies coming up. Just one of them now, there are a lot of talks about artificial intelligence. But of course, we don't fully know first their cost structure, their potential, and the benefits that they can deliver. And of course, this creates an additional challenge for regulators that need to develop new solutions. They need to update their regulatory framework in order, as I said, to keep together, to try to find a balance, the sweet point between many different goals that they are mandated to pursue. Cost minimization for network users, integration of renewable, and so on. And this is very challenging. Reports like the one you prepared could be a valuable tool to facilitate the life of practitioners and the life of researchers that want to explore what are the best solutions for that. Second thing, incentives. In the past, we did at the FSR some research on incentive regulation. And here it's nice to note that regulators in Europe are more and more experimenting with incentive schemes to try to steer the investment and the operation decisions by network operators. We know that business as usual, the old cost plus regulation is not viable in the context of the energy transition. It would be too expensive and too slow. So it's good to observe that regulators are using more and more revenue caps, are exploring topics, are exploring output-based incentive regulation. However, and maybe let me close with my final remark, this can be tricky. And let me explain. First, incentives can be extremely powerful, and they can really push the boundaries of what we can do much farther, so we can keep together in a better way those tensions that I mentioned earlier. But of course, they first require regulators that have enough resources to manage those incentives. It's trivial, but you need to remember that to implement an incentive scheme, you need something to observe. You need an input or an output that can be observed and to which you link the payment or of an incentive, positive or negative. It's not really the case. And probably you are well aware, not all regulators in Europe have the resources in terms of staff, in terms of enforcement powers to do this. Our experience is that probably it would be good that regulators have more resources to implement more sophisticated incentive scheme. A couple of years ago, in a study for CEER, we simulate a very simple example, but with realistic numbers. And we noted that cost savings would be really high, and they could well justify additional resources for regulators. So this seems to be the case, but it's not just a regulatory choice. It's a policy choice. It's something that outside of the regulator, someone has to decide. And this, I would say, this requirement for policy guidance, for a clear policy guidance, is more and more urgent, I believe. Indeed, we can develop more sophisticated incentive mechanisms. More resourceful or skilled regulators can try to deploy them. But at a certain point, it's not just a technical choice, an issue of regulatory technique. At a certain point, we need the policymakers to make a clear decision. And for instance, I think at a certain point, they should specify better what is the ranking of the goals that regulators have to pursue. Because it's more and more difficult to try to find an equilibrium between an increasing number of regulatory goals. And clearly this call for policymaking. An example, and then I will close, is for instance, who pays for the massive wave of investments that we need, or who pays for the disinvestment that in some cases we may experience in the near future. Traditionally, regulatory practice said that network users must pay for the network, but this, you see, it's very fine if you are in a stable context. If the context is very dynamic, that simple rule probably is insufficient, and then maybe we need to think out of the box. Maybe we need to ask other parts of the society to contribute. But this, again, it's something that probably goes also beyond the boundaries of what regulators can do, and calls for policymakers that specify clear and workable mandate for regulators without, of course, undermining their independence. Thank you, Rafael.
Thank you so much, Niccolò. That was a very interesting, a very broad, I would say, perspective, but also, yeah, I think you're outlining the challenges that we're seeing. And I'm very glad that we have both ENTSO-E and then ENTSO-G. So we also have both sectors to be able to reply to that. I think they have different challenges, but also the same idea of finding this new toolbox. I just want to say thank you also for the call for more resources for regulators. I swear we did not ask you to say it. So this was definitely your own views, but we cannot agree more. We couldn't agree more with that. Okay, without further ado, I'll give the floor to Rainer Palm for ENTSO-E to talk about the challenges for the electricity TSOs. Rainer, floor is yours. Rainer, you're muted, sorry.
Yeah, no, I know. I think now it's better. So thank you very much, Raphael, for the introduction and for the warm words. And congrats to Franziska for the report and the entire team. I think it's a valuable report for us all, because it shows that regulation is more on a national level, not that on a European level, and that also shows the complexity we are facing on that. So therefore, I think we should bring it to a bit higher level to the demands to the regulations and ENTSO-E's perspective. I'm happy to share with you ENTSO-E's perspective on what we think what is necessary. So in order to build a European power system for the future, we need three things. First is stable, predictable, and an attractive and competitive regulatory framework, because it's necessary to unlock also private capital for the massive investments we face as TSOs, but also as DSOs, and financing needs at an unprecedented scale. The second is that we also need public funding, so EU funding, for example, which we know from the MFF, and we welcome the MFF proposal from the European Commission towards CEF-E grants and funding, as well as the Competitiveness Fund and Horizon Fund, which gives a second source of financing and funding for TSOs and DSOs. And third, we also reflect here on the European Commission's proclamation for financeability and affordability to meet the energy transition. So affordable TSO financing. So of course, and Nicolo was reflecting that the TSOs, they do a lot to enhance the existing grid. So we do dynamic line rating and so on. So the so-called NOVA principle. So we try to enhance the existing grid, to use it more effectively and efficiently before we go to grid expansion. But grid expansion is also a no-regret measure. So we welcome the discussion about regulatory systems, how to get it financed. And so it's a good thing that we have the possibility, and thank you very much to CEER, also to discuss it here. So in a lasting period of high investments, what we see across Europe, so sufficient equity is needed to maintain the strong capital position of a TSO, but also for DSOs, and therefore a competitive remuneration via return on equity, or, for example, what Franziska presented, the weighted average cost of capital, the WACC system, is both key to attract investors, private investors, and to keep capital costs as low as possible for the tariff payers. So complementary to that, we think that funds such as integrating the CEF-E grants with grants from other programs, I already highlighted it. So we welcome the MFF proposal of the European Commission, non-public funding, and also funding and financing from the European Investment Bank, and also national development banks are very welcome to enlarge, to expand the portfolio of financing. Because we also spoke about the tariff payers, that they need to pay for the grid enhancements, for system security. And what we see is that affordability and acceptance and public acceptance are closely connected together. And therefore, we need also as TSOs and DSOs to keep the financing costs as low as possible. So therefore, from our perspective, timely investments now, they are beneficial to the tariff payers before we use a lot of redispatch and postpone investments to future periods. But we need to raise debt and equity at affordable costs. And equity is raised by investors, by private investors. And so we need a good rate of return for the private investors on the one hand side, but we also need to have the equity position to raise debt on the other side. So therefore, it's good also for the TSOs and especially for the DSOs to raise debt and equity via innovative financing instruments, for example, mezzanine capital, which can be used to enhance, to strengthen the equity position in order to raise debt at lower rates. I think this is very important. On the one hand side, equity, on the other side, debt. And this should be also supported by the regulatory framework. That means, well, on one hand side, regulatory incentives or rate of returns, good rate of returns and competitive rate of returns to attract private investors. On the other side, financing costs should be recovered by the regulators, fully recovered by the regulators. And of course, what is also necessary, if we also have a mix together with EU grants, for example, from the say new MFF starting in 2028. So we hope that it will increase according to the proposal. So it should not be penalized by the regulator if we use grants, because if we normally use grants, so the OPEX and the OPEX for investments are mostly be penalized. So that should not be done in the future. So we think that also if you use grants, it should not be tied to the existence of a cross-border cost allocation, CBCA, and that should only be done on a voluntary basis, so to facilitate also to the use of grants as a mix of the portfolio. So to bring together, so on the one hand side, I think we need a good regulatory and stable framework, but we also need financing and funding, innovative financing, innovative funding to meet the requirements for the massive investments. And it also helps to the goal of affordability, because the affordability and the acceptance are closely linked together. So this is for my statement for now.
Thank you very much, Rainer. This is a perfect in terms of time management. So thank you for sticking to it, and a very interesting perspective. I'm quite excited to have our next guest, who is George from ENTSOG. Excited because we were not expecting or we didn't first thought through the agenda like this, but we finally managed to have you, George. And so we have also the perspective of the gas networks. So please, floor is yours. Can you react to this?
Thank you very much, Raphael, and also thanks to CEER for the invitation to this webinar, and also to react to the report and to Franziska's excellent presentation of this, huge report of 228 pages. I would say you could call it a Bible of regulatory frameworks for, the European energy systems. And I can also say it's much appreciated from the ENTSOG side. We use also the report to do some overviews of the regulatory systems in the member states. So please also rest assured that on our side, it's very much welcome and it's used for, a lot of research. So thanks a lot for this one. Then reacting to your presentation and also to the report, one thing that stuck, in my mind is in Franziska's presentation, there was regulatory regimes are complex and individually adjusted, and direct comparison is very difficult. And I think this is something that has been now echoed here in this, in this webinar as well. And we see it as well that, on the member state levels, the NRAs see this biotope of the regulation themselves in the most clear way. And if you look then, to create like an EU overall framework or benchmark, it gets quite difficult. If we look on a side note onto the ACER efficiency comparison that came with the new hydrogen and gas package, and we'll do a comparison in 2027, we see absolutely we can understand why it's done and that it's here. But I would say, a bit of a warning to say, on the member state level, the NRAs can do it very well. But if you then norm grid everything or make everything to the same level and try to compare apples and oranges, it might get a bit complex. That's just on the complexity of the regulation. Then on a positive thing, I think that what we see is that the regulatory frameworks are adapting and are adaptive or flexible to the challenges that we see. If I look at the report, you have one section that says the energy crisis and the regulatory frameworks. I would like to give a short comment on this one. What we see, we do at ENSOC, for example, the tariff network code monitoring report. So we look in a biannual scale on the tariffs, and what we see, flexibility is much appreciated in regulation. So if you give ranges that give, the member states some way to react, I think that's a very good thing. And what we saw there basically was, due to the energy crisis, we had much more demand to put gas into storage and also to make it attractive to put the gas into the storage. And then we saw the 100% tariff discount for entry and exit into storages. I think the number of member states that applied this 100% tariff, so you could store gas for free, nearly doubled. The same you can say also for the LNG entries. There were also saw a significant number of increase for 100% for LNG discounts, LNG facility entries into the gas network, just to raise the point on the flexibility there. Then also, as we have also in this webinar already had, like, the challenges, the uncertainty, the uncertain outlook. What we see in the gas system right now is a massive change of flows. So before we had traditionally east to west flows, and now we have west to east flows. We have other flow patterns. We have LNG that comes from different terminals, basically. And also to this puts also challenges to certain member states and TSOs, depending on how their model was set up. And what I see here basically is that one Central European TSOs went from parts of the network from a price cap regime to a revenue cap regime to take out the volume risk from their regulatory model. So we see also there's some flexibility there to react to things. And then lastly, because Rainer has put a lot on the outlook on the financing of networks, I would also like to take a point here. What we see right now, if we talk also not from the gas perspective, but a bit forward looking on the hydrogen perspective, as a lot of hydrogen operators will come from the gas operators, that this uncertainty of the future really also affects the TSOs, because as Rainer said, it might be a timely manner, or it might be a timely manner, but it's a timely manner for now to take investments that only will pay off in the future. And especially for the hydrogen networks, we have the problem, you need to build now, you build capacities for a future hydrogen market for peak demand, but right now the bookings are not there. So we're also happy to see that regulation also reacts to this, for example, with intertemporal cost allocation that is possible. We see the amortization account in Germany that makes it possible that you can build up a network and then recover the costs through intertemporal cost allocation at a later point. So I think it's as said, you have to keep a lot of factors in mind as a regulator. And I can understand that, there's so much things that you have to think about and that it's very, very complicated. And I think also what Nicolo said, it's not an exact science, but it's to tailor, to solve issues at a specific time and place. That was a sentence that really stuck with me, Nicolo, on your intervention. I think it's, it's a case-by-case, step-by-step basis, because you cannot create the perfect regulatory framework. But if you can adapt to circumstances, if it gives certain flexibility, you're very much, doing your best. And that's it from my side. Thanks.
Thank you, George, for this intervention and for sticking to the time. This is very helpful, and I think we had a whole view of the sectors. Of course, when you were speaking, I was thinking, okay, we could also have invited NOH and like having also the hydrogen network operators, but well, there is a limit to be set. Okay, we have around 10 minutes for the Q&A. I'll start with a question I've seen in the chat, questions from Charles Esser, who's a longtime friend of CEER, if I can say it that way. I'll read the question quickly. I think, Franziska, you already kind of answered it, but I'll read it and maybe add something. So the question would be if CEER or whether CEER uses the finding to identify, of our report, to identify some best practices approaches that could be more broadly applied to European countries' frameworks. And maybe I'll complement this question by asking, maybe there are best practices, but maybe the other side of the coin would be common challenges, maybe that you could outline from regulators on that aspect.
Yeah, thank you very much. As I mentioned, the report is not meant to give concrete recommendations which system is better and best. The idea is to give an objective overview of the regulatory regimes in place at the moment. And by the way, it is not even possible to say this is the best one. Also, as George and Nicolo said, there are so many differences between each country, let it be from political view or from environmental view, and so many external factors that influence the decision which of the system parts are chosen. And this also complements the second question. There are many different factors that influence the decision on the regulatory regime. We see trade-offs between the efficient investments and anticipatory investments. This is quite common between many countries, and long-term planning and the flexibility regarding political decisions or even political shocks and the reaction on that. So all these are quite common between the countries, but then we have like the transparency issues, that we have many long processes in some countries until the decisions are met and until all memberships and interest groups were heard. Another point is that all decisions have to be tried to be academically based. So in the case of a court case or court hearing, they should be on a good, reliable and academic basement.
Thank you, Franziska. That's very useful and very clear. I don't see any other question in the chat yet, so I'll maybe turn to Nicolo on maybe taking a step back on what we just heard, and also what you outline in terms of these new needs and needs that are evolving. My question would be, okay, do you think that the current mechanisms that exist are evolving fast enough? We're talking a lot about innovation, digitalization, flexibility by design, all of these issues, right? Rather than just hardware investment, which is still important. Do you think things are going fast enough? And maybe have you seen, maybe in the grids package that was unveiled in late December, anything that would point out to that evolution?
Not an easy question, Raphael. Maybe I will answer by not answering it. Let's put it this way. And actually, it can complement also my previous message. when I say that we need guidance, political guidance, it's that we should also be transparent and policymakers, and then also regulators should accept and remind the audience that we cannot always try to keep everything together. We cannot at the same time deploy a grid that has enough capacity to handle whatever new generation or demand patterns will come up in the future, and at the same time have a grid that is at the lowest cost for consumers. Certain trade-offs are inevitable, and it's not that we need to accelerate. Sometimes I think we also need to accept that we need to make choices, and someone has to declare, given these complexities, given this dynamic landscape, I consider this goal with a priority over another one. So, for instance, we can say it's a political choice in the end. So we want to, in case we are uncertain, we go for more grids because we think that integrating more renewables is the priority. And the rest we do if it's compatible, and to the point it is compatible. I think that at a certain point we will have to make this very clear at the highest level. I think that the grid, I didn't read all the package. I think that they make some statement in some regards, but maybe it's not something that the Commission only has to do, but governments, because as several people, they said in the end, often it's a national choice that must be made.
Thank you, Nicolo. I think it's a very fair issue to talk about the trade-offs and the issues around political choices. Not everything is straightforward or an easy answer. I'll just get back to the other panelists just to really finish with a short question for each of them. Just to pick up on what you said, Rainer, on the need for certainty, right? Certain and a predictable environments. Maybe one question would be, okay, what specific regulatory certainty or mechanism is the most crucial in your mind? You talked about a few different things, but maybe if you had to pick one, or if you wanted to insist on one aspect.
Yeah, Raphael, since we are talking about massive investments in the next years or the years to come, so I think the regulatory framework should be addressed to this point, especially. So we think that you can only unlock capital if we have a stable and predictable regulatory framework. This is one of the most important things, and that we can recover all the costs of debt which we need to raise. So we speak about, say, 100 billion euros a year over the next 20 years. Yeah, this is so the maximum sum we see over the next year. So therefore, we highlight this point of the regulation, especially. Of course, there are others, OPEX and so on, but I think this is very important to highlight that, and therefore I would be very happy if that could be taken as a takeaway also for the regulators today.
Thank you, Rainer, for this very good and short response. Maybe I'll turn to George to quickly ask you this question. You pointed to the intertemporal cost allocation mechanism. Maybe the question would be then, is this for you the preferred way to deal with these challenges at the moment on the gas grid, or what would you say is the most crucial element?
I think, thanks a lot, Raphael. I think the intertemporal cost allocation is a great start because it allows basically the cost to be recovered at a later point. But if I speak for hydrogen and hydrogen market, I think the whole toolbox that we have now is good, but it needs also to be expanded. So What ENO and ENSOG are also working on is a joint report on de-risking of hydrogen infrastructure, and what we want to come up with new ideas also to attract the capital and to make the financing and investing possible.
Thank you, George. That's certainly something we'll be looking at and following very closely. All right, I think we're right on time, so I'd like to close now by thanking everyone for participating in this webinar. Of course, our speakers and panelists, but also everyone who attended and asked questions. I've seen a question from Luis Cunha on the chat. We couldn't answer it now, but we'll make sure to answer it. At least we'll ask for Franziska to maybe write a few words. I think we have your contact details, so we'll be able to address this. Just to point out and to close by saying this was the first webinar of 2026, but we do have a couple of others already lined up. We will probably have a webinar on NRA, so regulators' oversight on TSO investments. We have a report that was published late last year, and we're planning to do a webinar on this within the discussion on the grids. And I think many of those who attended this webinar might be interested in looking at those findings. And we'll certainly make sure to promote this. And the second webinar, I think, will be on our report on LNG terminals, where we're looking a bit about retrofitting and changing and adapting LNG terminals for new types of gases and what are the challenges around this. So feel free to register to our newsletters or write us directly if you are eager to know more. And with this, thank you. Thanks to everyone. Thank you for joining, and have a very good rest of the afternoon. Thank you so much. Goodbye.
See you. Bye-bye.
Thank you very much. Bye.
Bye-bye, and thank you.
Thank you. Goodbye.